Selling China, video game companies, e-commerce, property, I understand, and manufacturing stocks. Why is that? I'm particularly intrigued by video games.
I think most of them are ex-growth. Yeah. I think a lot of investors...
have been doing okay, sir. Tencent, Alibaba, their growth numbers are okay. Profit margins are okay.
They used to grow at 20, 30, 40% a year in the past. Right?
They've corrected so much as well. They've fallen so much as well. They've corrected so much as well.
Yes. That's where there's a split of view amongst investors. For APS, we believe most of these companies are ex-growth. Yeah? While some other investors believe that because they've dropped so much, the multiples have dropped to maybe 10 times today, and therefore they're undervalued. Now, they are undervalued only if they can continue to grow at maybe not 30, 40% a year like in the past, let's say 10, 20%. Right? But the ex-growth today, i.e. they're not going to grow at all for the next 3-5 years at 10 times earnings, which is slightly above the market average. I think they're still expensive. I think one of the mistakes sometimes we make is that because the share price has dropped so much, it is cheap, and therefore it's time to double down. I think that's probably not quite correct. Because the future share price will depend on what? On the future fundamentals, future growth.
So we're running out of time, but I do want to get some of your ideas in. You have an allocation to an auto component stock, Bethel, and you also like a satellite and AI provider, Geovis. Very quickly, if you could highlight why you like these names.
I think they represent the future of China. As I said earlier on, the Chinese economy is being transformed from a infrastructure and property-led economic model to one that is innovative, technology-based economy. And therefore, we want to invest in the future of China, which will include the EV market in particular. Today, China is already the leader in electric vehicles or EVs. And I believe this is just the beginning of China's EV industry. But we are not interested in the car manufacturers because there's an ongoing price war.
Yeah.
It's not ended yet. So instead, we went downstream to invest in the component manufacturers. And Bethel is a leading auto component manufacturer, growing very strongly. Whereas Geovis is using satellites, AI, and big data to offer their services to the government, to businesses, and in the future to consumers. It has grown at 50% a year in the past, and going forward, because it's a new industry where demand is still very strong for their services, it can grow at 40% a year for many more years to come. So these are the sort of the promising stars of China, if you will. Therefore, we are positive on these stocks.